Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
Hey, Marco, how you doing?
Good. How are you? How's the weekend?
Yeah, it was good. Long weekend. Got to catch up on some sleep.
Nice.
How about yourself? All right.
Same. About the same. Yeah.
And a lot of conversation. I'm reading a lot of news on like everything's going up and trying to figure out why. But go ahead.
I mean, I was excited for today to find some cool stuff on the board, but I got to tell you, I'm a little bit disappointed. And I wanted to ask you,
don't see that much
on a day like this. I'm noticing that sharks aren't really getting in. So I'm thinking that might be a telltale sign for something. I mean, have you seen anything like this before? This is really odd.
So, it's the first day in a while that we haven't seen as many plays. I was been looking as well. It's a little light, but, maybe, we're talking about things are just going straight up. So what's there to do except just get leverage, buying calls and buying stocks? I'm not sure that makes the game fun. It makes the game a little nerve-wracking for people who've lived through sort of the crashes. And we have a whole new 10 years of new investors that are in and have never seen something go down, a market go down. Well, you had the coronavirus, but it didn't stay down there for too long. Mm-hmm. So this notion that everything just comes right back up immediately is really stuck in people's minds. So I would say that maybe this weekend I thought about the New York City taxi story. I'll tell you that story, the New York City taxi story. So New York City in the 1970s, I just remember my friend's father was a taxi driver, and he had two taxis, and he had paid, I believe, $75,000. And he thought about the taxis like his house, like it was a mortgage. Right. So he went in and he got a loan. He bought one taxi. He was leasing one or renting one to another taxi driver who was paying him. And then he was taking that money to pay off the loan. And, as the years gone by, I remembered him, and I was no longer friends. I was very young at the time, but I remembered that. I remember thinking, oh, his dad's a taxi driver and he has these two medallions and that's how he lives and that's how he makes his money. And I just thought, okay, it's different from be a doctor, be a lawyer, be something. And I remember in 2000, maybe it was 2004 or 5, these medallions each were going at well over $1 million. I believe it was like $1.4 million. And I just thought to myself, what an incredible, wow, like that's all it takes. You buy them down, you lease it out, and then it's just like real estate. Mm-hmm. And I thought it's incredible. So I started looking into these medallions to see, a graph, if you will, of how these things went up. Now, at that time, it was almost 30 years later, 20 something years later. And a lot of things had gone up over 20 years, but this seemed to make a huge rise. And what I found was an interesting story where there was this guy called the New York City Taxi King or something like that. The New York City King of Taxi, I don't know, it's Taxi King, call him. And what he did was it was almost like he cornered the taxi market, right? There was so many taxis and the taxi limousine would only allow so many medallions. And he started buying a bunch of these and he would pay up. And he got to the point where he had maybe 200, I'm just throwing out numbers. I don't know the exact numbers. Maybe it was 300 taxi medallions. And the prices had gone up from 75,000 to 400,000. New York City was maybe no longer, but was a mecca of tourism, and people would come from all over. There was taxis. The need for taxis were there, and he was buying these medallions and paying up, and he had, let's say, 200 medallions at an average price of $150,000. So he had already about 30 million in, and now the medallions were 350. And every time, what would happen is he would just take a little bit more money, okay, just a little bit, and he would buy the next taxi. And that next taxi, he didn't care what he paid for that one more taxi. So if he paid 400,000 for the next taxi, that was 20 per, almost call it 15% higher than what was just paid the previous market, 350. And then the next taxi he would just pay 450. And with that, all his taxis, all 200 of them, went up by 20% or 30% just because he bought two new taxis. And it just kept going. And at the end, there was $1 million taxi, and then $1.1 million and $1.2 million. And all it took was one person to buy one taxi at $1.1 million, $1.2 million, and his fleet of taxis at that point would grow exponentially. Kind of reminds me of what's going on right now, right? You have a lot of these stocks that have huge valuations, and every one share that ticks up and changes the price creates a lot of money, paper money, for a lot of people. Now, if you hold on to that and everybody holds on, the more someone buys, as long as no one sells, everyone buys another share and it goes up another 5% every day, then everybody's share is worth an enormous amount of money. Okay, the problem is how do you get out? How do you actually get out? Because there's really not many buyers at each incremental level. And so, what I see here is a lot of what appears to be a lot of that. Like there is, you talk about ARK Investments, and we talked about that over the last, say, week or two. She's getting billions of dollars almost, I think it's like weekly now. And she has to invest this money. And this money has to go to a lot of the names she already has that she's built up a stack from, call it the last 18 months. And each time she buys, everyone gets word that she's buying more, and then everybody buys, and then it just keeps going. And, it doesn't take a lot to start moving these names $2, $3, $4 because you've knocked out the sellers. The shorts are panicked to sell any of these things. And, it starts becoming this self-fulfilling prophecy that these things are going to go up until there's some event or something happens. I don't know when that event might be. And I'm not saying that, I think on a valuation basis, you could argue that these are not valued. They can't be valued this high, but that doesn't mean they can't go up a lot more or double, frankly. But it's something, just this whole environment reminded me of that story. I think it's a great story. I think there's probably a Vanity Fair article on New York City Taxi King. That's all you have to, it's an incredible story of how he basically bought a fleet, kept mortgaging out his fleet to get more money to buy the next cab, and it just incrementally grew. And as it grew, maybe he'd sell one at a higher price and it would make him a lot of money, or he would just take the money out of loans. Eventually, I think there was fraud in there. He somehow got in trouble. I think he went bankrupt. And the moral of the story is that taxi cab licenses today, the same medallions that went from 75,000 in the 1970s to or maybe it was even 30,000, but you could take a look. But it was something in the low, let's call it 75 to 1.2, 1.4 million, wherever it went to today. It's probably around 75, 80,000 because of Uber. And the event was Uber coming into New York and technology changing the game. So, it's a story of an event happening, changing the dynamic. It's a story of leverage. It's a story of how things could be created, how bubbles could be created. And this is, I've never seen anything like this in this type of size. This trumps 1999, 2000 by a long shot, because back then it was $100 million company that was going to 500 million, right? 200 million going to, 700, 800 million. It's not a $300 million company, 400 going to 10 billion. This is where we're at, where every company is $1 billion these days. Every company is 10 billion, 20 billion. Now, there is a lot of money floating into the market. There is a lot of money, but ultimately people got to eat, right? And people will use some of that money to try to get off. I don't know. There's an event that needs to happen to make things turn. I don't know what that event is, but I thought it would be maybe that's a good leeway to go into SPY puts and thinking about how you would hedge it. We're long calls in a lot of different names. We're long things. We're riding this thing. I'm I get hate mail when I put out a put idea, but you're trying to be there when this thing turns. if it ever turns. If not, you let the winners run and you keep taking off the way you are. We'll still have some calls to buy, but this is where things are getting a little crazy. I also would say, you're reading articles about baseball cards. I was a big baseball card collector at 9, 8, 9, 10.
Right.
I loved baseball cards. And, baseball cards are going through the roof today. So all these cards that I probably have in some garage, I think in Florida somewhere, these things, I know I have a few of these cards that are like, whoa, these things are going up huge. And I'm actually starting to think I should get those and sell them on eBay. But, at the end of the day, when I'm not even paying attention to the baseball card market, and you see baseball cards is the new art. It's the poor man's art, right? Pokemon cards, all these crazy things there. It's the poor man's art. And lo and behold, this weekend, the reason I thought about it was that there was an article on Zero Hedge about the Met. Okay, the New York's famous museum is losing money. It needs $150 million. So what are they going to do? They're actually petitioning their board to sell art. Now, who owns art? I can tell you the billionaires own massive amounts of art. If you go, art always goes up. Just go ask any art dealer in New York City. It's the best asset over the last 100 years. And it's frankly, where a lot of the billionaires park a lot of their money. The interesting part about art is that, again, it's, you have people have cornered the market on the big pieces, so you talk about, Da Vinci piece, and you can't get a Da Vinci piece for under, let's call it 100 million, whatever it is. I'm way off, I'm sure, but let's just call it 100 million, or Picasso at 100 million. And all of a sudden somebody finds a Picasso somewhere and somebody pays up a billion for that piece, or 400, 500, 600 million, whatever it is, then everybody's art collection rises. Even though nothing sold, it's just that one. So it's because everybody holds it. And so what happens when one of the biggest art places starts selling or floods the market with a lot of art? I don't think they're selling the Picassos and all that stuff, but at the end of the day, they are selling art. So in 2008, 2009, I can tell you that I think his name is Fold, CEO of Lehman Brothers. He ran into trouble because Lehman went bankrupt, and the Bear Stearns, many people from the Bear Stearns CEO ranks, a lot of them were selling art, and it was panicking a lot of, these guys have big collections. Billionaire guy has a big collection of art. And when you start selling art at fire sale prices, it marks down. It's a mark. That's what we call this. It's a mark of art at that time. And I know the billionaires were all like, it was a big topic of conversation. 2008-9. It's like their whole art. You got to keep buying it in order to keep it there. So it's very similar to what we're seeing here. Okay, there's these marks, there's these levels. So with that said, let's take a look at. We'll just look at some hedges, or just trying to look at some hedges. I'll show you how I think about it. And I think, I should make a video on sort of the times where I've bought puts over the last 2 years. And, it's sort of spidey senses where I think the market's not acting right and things are off by a little bit, or something's not right here. I'm getting that spidey sense here. I'm not trying to, the last put we spread, which shows you that I'm just trying to put a placeholder there, but I'm getting that spidey sense that things aren't right. And so you bring up the idea that there's not a lot of UOA today. Sort of makes sense to me a little bit. It makes sense because I don't think the big guys, the sharks, are the market has made such a big move. I don't think they're reaching here. The volatility is high, prices are high, and it feels like a reach. So I would see that I could understand that they don't want to be reaching. And then I can also understand that buying puts has not worked over the last, 2 months for almost every stock. So, everybody starts thinking, why buy puts? And, it's been a waste of money and we've been losing. So I think what I'm going to show you here is that you can, you could have seen that. You're seeing that a little bit. So what I do here is we built this open interest tool, and you would basically click on any stock that you want, but you could click on the SPY. And I just want to look at the 380 level, 380 to the 390 level in puts. Click on puts here. And I want to click, let's just see, you can see the top 1%, but here's the top 5%. And I want to look to see, where are the bets being made here? Where are people, where are the bets? Where do people have their money laid down? And what you see here, is, usually you do see the bigger ones over here. People are buying the 1-day puts, day trading, trying to catch the big move because you get the leverage. But here, these February options, they've been lining up on these February options for a while. And you can see even 100,000, 65, 26, 141 at the 80s. Okay. But this all, and now we're all the way up here. This all disappears. 60,000 is the highest. Then you got 85s, nothing here. So this would be a small gap, if you will. Like there's nothing stopping the market. The way I think about it is when I pop these up, I just assume, right or wrong, I just assume that these are all bought, okay? That people are not going crazy just selling puts. As you go lower, for example, the 80s might be a put spread from the 90, 80. Somebody may have bought those. So I can give some credit to that or, some of that thinking. But in general, the way I tend to look at it is whatever I see, it's that people are buying these for hedges. Okay, so I'm looking at the 390s here, and I'm saying, okay, somebody's got 58,000, and I don't try to think about how many people have puts or whether I just say one person, me. I own 58,000 puts on the 390. So I imagine myself as being that person. And I imagine myself being this person. And I imagine myself being this person, and this person. I have a lot of puts in February. Now, I can tell you that historically, I have bought these puts over the course of time, right? It was even through December, and as the market had gone from 370 or 9, I was buying these puts in February. So a lot of these might be old purchases that I have, but I've been trying to roll up. I bought the 85s, I bought the 50, 60,000. But what happens if the market closes at 390 on Friday? That's going to be a bummer. If it closes at 390 on Friday, I lose on all of these. All this value that I have on all goes to zero. Okay? It all goes to zero. Now, we could say, okay, well, what if the market goes down to 386, 85, 84? Let's call it 380 if it goes to 380. Well, if it goes to 380, right, there's something happens, it goes to 380. Well, if you think about yourself owning all of these, like I own all of these, then what needs to happen? I actually have to sell 58,165. I have to sell 85,282. I have to sell 28,000, 24,500, 141. I could roll them to the next month, okay, but I have to get out of these. And when I'm getting out of them, okay, I'm selling all of these puts. What really am I doing? What am I really doing? What am I really doing? Buying or selling stock if I'm selling out of those puts?
For selling out of those puts,
then I would be buying stock. I'm putting pressure upwards. I'm putting pressures upwards on the stock. Okay, so as the stock goes all the way down and I sell these puts, I'm putting pressure upwards on stock. You always have to remember when you buy the puts or buy calls, you're putting pressure on the direction of what you're buying. So when I'm buying the puts, I'm putting pressure downward on the market. So when I bought 58,000 puts, I had put a little bit of pressure downward on the market. When I bought 85,000, put a little pressure downward. When I bought 141, a little pressure downward. The flip side, it works in reverse. Now that I got to get out and I got to sell 58,000, I'm putting upward pressure. There's also an element of delta in there. So I can tell you that when the stock goes way in the money, all of these become like stocks. So that would be, I could just add them, 58, 85, that's about 143, plus 28, 171, plus 24, 195, and 195 plus, let's just call it 15 there. So it's 210, and 140,000. This is not going to come into play really because I land there, but 210 is 210,000 options is 21 million shares. Not a lot, not in the grand scheme of things, not a ton, but still 21 million shares that I would have to buy, which is going to put pressure back up towards here. So as we're going down and I start to sell these, it keeps the pressure back up. Same thing that you see intraday. So when we're looking at today's market and you see, I don't know what the open interest is. Let's just look real quickly. I'll use something different so I don't get rid of that. If I look at the SPY right now and I see, look, 900,000 options trading, and you could see the open, the volume here. There's a lot of volume here. People are playing around here. They're trying to catch that one day $10 move on a stock where they make 1,000%, And so when you see a lot of open interest, it oftentimes acts as a barrier up and down. So calls, there's 93,000 here, 120,000. If you assume people are buying these, if they're selling them, then it could cause a catalyst to move out. But really it's because why? Because if they're closing, for example, the 93 calls, if more people sold them, and then at the end of the day, they had to buy them back, that causes a positive push. Remember, buying calls, positive push. So depending if they sold them or bought them, you're going to have this. But generally, one-day options, you're getting a lot of this buying activity that's trying to capture these big moves. And usually the market's not going to give it to you, or they wait for the last 15 minutes of the day when everybody sells out all their positions, and then it moves wherever it wants to move. So you start seeing a lot of that over the course of the last few months where the market makes its move at the last 5-10 minutes, right? It's gone up all day. And in the last 5-10 minutes, it either shoots up or it shoots down, okay? Because people are trying to close out the positions. And once everything is closed down, then it makes its move. So going back to this, what I'm trying to say to you is that the worst case scenario is for the option for the stock, the SPY, to end at 290 on Friday for me. And what does that do for me? It does nothing for me, frankly. Everything goes to zero, and then I'm left with no insurance. I had all of this insurance on Friday. On Monday, I'm going to have no insurance. So guess what? I'm going to have to buy the insurance again. I'm going to have to go into the market and buy the insurance. What usually happens when the market decides it wants to go down is it doesn't make it cheap to buy puts. It doesn't make it easy to go in there and say, I can buy some puts and today's the day it's going to go down. It actually causes you to feel a lot of pain, okay? And it has been causing people to feel a lot of pain, and that's why people are not buying puts, okay? So by knocking me out here, assuming this is all me, by knocking me out here, taking all this value from me, then I actually have to go pay for puts. And if the market's 390, how much of these March 90 puts going to cost? 390s? They're going to cost a pretty penny. They're going to make me pay 5, 6, 7. That's not going to be something I like. Right now, these things cost very little for Friday. You know, if I want to roll to Marches, they cost $6, $7, $8, whatever they cost. We can actually look at that quickly just to give an idea. So you could start seeing how the market does this dance to not make it fun for you to jump in there and buy puts. So the 390s for March cost $7. Okay, so $7, that means in order to make 200% on $7, that would have to go to $21, which would take you all the way to $369. And aesthetically, that doesn't feel like it can do that, you know, it right now. It just doesn't feel like it, right? So that's why people are attracted to the front weeks, because you can buy the February 19s right now, 390s, for $1. Now, if it goes to, $1.32. So if it goes to 360, you literally make 15 times your money there. And that's 1,500%. That sounds a lot better, right? So people are trying to catch this move. But the market, again, doesn't like to give you those moves. It might catch it if there's an event, and you might catch it, but it doesn't like to give it to you. And so I keep going back to this open interest to show you. Sorry, I think I'm catching a little bit of cold, but to show you how tricky the market could be, because you see here that there's nothing from February 22nd to March 19. There's really not much you can see. I mean, I'm not making it up. You could see that the open interest is not there. And that open interest, again, acts as buffers, a little bit of resistance or sort of hurdles that the market has to jump through in order to get through. And it acts as a little bit of sort of a lock, a gate and key. You know, you gotta. It's preventing the market from going down so much, because everybody's sitting there waiting for the market to go down. That's not going to be good for the market going down. Okay, so this to me is scary. You see, February 22nd to March 17th. You don't see anything above, except this one. You don't really see anything above 10,000. This is the highest one, 8,000, and that's the following week. Once you get past this starts getting really light. And then you have 60, 24, and 79 in March. Again, these might be from over here. I'd have to look to see if there's any spreads and whatnot. You could start digging deeper, but you know, the March 80 puts cost, let's just get it just to give you a sense of how much they cost. that has to be big money. That has to be big money that is buying these options. The March 80 puts cost $4.50, and you're talking about a 4%, 3 to 4% move down just to get to 380. Okay, so this is where we're talking about how the market is. I call it trapping people. How it will
Mhm.
try to trap people because it's holding up here, and it's holding up. I wouldn't be surprised if it actually holds up until Friday, and then Friday late afternoon kind of makes its way towards 390. Volatilities go up, which makes all these prices go up, and you get this lockstep move. So how do you actually play this? I look at trying to catch something maybe in the middle. I know that this March 1st catches at the end of the month, the beginning of the month. There's a lot of movement. Oftentimes there's a lot of movement, and so to some extent that's a little bit of an event. So something like the March 1st, 3rd, or 5th, you get past this week, okay, which I think these act as a little bit of a buffer without some sort of big event, and you start looking. I'd love a little bit more time to get a little bit more time here, but you start looking at March 1st, 3rd, and maybe buy something in this sort of range where right now we're at 393, 392, but you buy something in the 388, 386 range. You're talking about 388 is literally 1% down. 388. So 1% down, and then you're at the money, and that's where it could start hitting some momentum and start hitting the skids towards 380. So this is the way I think about it. I am looking specifically for these blank areas, really. Okay, you got here and here, which I would watch for, but that's 1 week. But I'm looking for blank areas because ultimately the volume's going to come in, and when if the market turns, then the volume actually starts coming in over here in a heavy way, and they start paying higher and higher prices because the market is starting to go the other way. So you actually win on price, you win on volatility, but you have to be able to hang in there. And look, the reason I say that I was planning on showing when I bought puts is because what I tend to do is nobody can catch the top. I mean, every once in a while you get lucky and like, oh, I bought these puts, and within 24 hours it started moving down, and that has happened. But more often than not, I'm wrong on the first, I'm wrong on the second, third, fourth, or fifth, I'm hitting it pretty big. It's because we're at that time where something like this is going to need to have some of these puts on. So I would look at some of this stuff. I would look at, this, I built this open interest specifically for the SPY, but it works also on, calls and stocks. And you can look at different calls and stocks. For example, we're going to talk about Palantir later on, but if you look at Palantir and how it's setting up, we'll set it up now so we can actually just set it up, but we'll come back to it. But I think you can gain a lot from this board and get a lot of insight as to where the hedges are, what people are thinking, and where is this resistance, if you will. So that takes me into, again, the next big story from my weekend was this Bitcoin. Just looking at Bitcoin and trying to see, what's happening here. I mean, it's an explosive market, right? Everybody's probably talking to you about Bitcoin, asking you for Bitcoin. And when you see something like this, let's take a look at this. MicroStrategy is selling $600 million in bonds to acquire additional Bitcoins. Now, MicroStrategy, MSTR, they bought Bitcoin in August of 2020. They've made a fortune on Bitcoin. Okay. Now they want to sell $600 million in bonds to acquire Bitcoin. If I asked you 2 months ago what this headline would do to Bitcoin, you would say what? You would say probably somebody's about to buy $600 million worth of Bitcoin. That's explosive for the market. But today, if you look at Bitcoin, and I haven't looked at it in the last hour, but, these things move every 5 minutes. So, you see Bitcoin looks like it's under a little bit of pressure from, let's call it 5 days. Yeah. So it looks like it's under a little bit of pressure, but I believe that Bitcoin would have made a huge move. So What are the stories in Bitcoin? The story in Bitcoin is basically the US dollar, fiat currency. Everybody's, trying to find to something like the new gold. And I get it. That's totally fine. My question to myself was, it's fine. What's going to actually crash Bitcoin? What could crash Bitcoin? That's all I keep asking myself. What could crash Bitcoin? You know, again, 2%, 3. I talk in probability. So when I talk all the way at the edge, I'm talking about what could happen. Well, the story, I got to attack the story. The story is fiat currency, the US dollar. The government is just, sending out money and it's just debasing the complete currency. Okay, that's the story. So the thing that will crush Bitcoin then is the opposite of that story. And what's the opposite of that story? Well, what if the Fed raises rates and says, you know what, things have gotten too frothy. Maybe it comes next month, 2 months, 3 months. But at some point they change their mind and say, oil is trading 75, $80. You got all the commodities trading up. You got the dollar's getting killed. This is a problem. So we're going to try to defend the dollar. My whole thought over the last 10 years was that the next crash would be a dollar decline, would be a currency problem. That's what I have always believed, since I don't think it's going to be the banks again. That the government has allowed to get the banks back in shape. The banks were a problem in 2008-9. Frankly, they were out of business. They were probably all out of business. So the government had to pump in money to the banks, had to allow them to build, and it's taken 10 years for them to build their reserves, to get back into the groove and to feel safe, pass the stress test, fine. That's probably not going to be where the problem is. The problem is likely to be a currency problem. To me, that has always been the end game. That if this is a chess match and it's a 25-year chess match and it's China, Russia, Iran at the table and it's like 5D chess, then the dollar is a problem. And if the dollar it's getting smoked, okay, so that's why you're seeing inflation, potentially inflation. I don't even know if that's going to happen, but you're seeing inflation with commodities and hard assets. But at the end of the day, the government can't let the dollar collapse, right? The dollar collapse is the end of it's like an end game. It's Hunger Games. I mean, it's bad. It's not a good thing. Okay, so world currency dollar collapse is a bad thing. So now you're getting stuck between a rock and a hard place. If you try to defend the dollar, okay, by doing what everybody, or not everybody, but I would say macroeconomists or people who have studied finance for 100 years, you'd say they need to in order to fix this, you got to do the right thing, and you got to either stop feeding the beast with money and billions every month. You have to let the market is a mechanism of supply and demand. Let the market find its level. And maybe at some point the government says, we fixed the banks, we fixed this, now we're going to let that happen. I don't know when that is, but again, if you let that happen, the market, you're trying not to let the market crash, but you also don't want the dollar to crash. So again, what do you do next? I don't have the answer. I'm not smart enough to have the answer, but I see a major problem here. There is a problem, and something's got to give at some point. Or this really is Hunger Games, and the rich are buying Bitcoin because they're going to Australia or New Zealand in the next year and a half, and we're left with a stock market that's trading at SPY's trading 800, and food costs $30,000 a month. So it doesn't really matter what you have. So this is the problem. It's a major problem. In the meantime, let's go buy stocks and let's go buy whatever. Right. It seems to work in baseball cards, anything. They're selling anything and everything on eBay. Just go on eBay. You can find things, Sony Walkman, there was 100 million sold in the 80s. You could probably get 3 times. If you have a Sony Walkman in a box, you could probably get 3 times what it was worth, 20 years ago. So just go up in your attic, find things that, Christmas gifts you never even opened out of a box. You sell on eBay for like triply value because it's nostalgic. I don't know. It's art. There's a problem. There's something going on. So that said, you're right. There isn't UOA today. I've looked at a lot of different things. There might be some now. I think that maybe that takes us a little bit to, let's just look at the top one, which was, well, at least it was top before, was Palantir. Yes. Palantir, talking about 1 million options trade. They came out with earnings. Stocks trading 28, down $4, 12%. Here's the problem. you take a look at this. This is important to look at here to show. I keep telling you how, games are being played. You start looking at something like Palantir, and yes, there's earnings came out, stocks down 12%, and volatility is down, across the board. Yes, earnings did come out, and they weren't that great, but this earnings now is $100, $100 implied volatility, 100 plus, stock down 380. Let's look at the open interest in the February's. You have a little bit of, you have a lot of volume here. Open interest was very high. This open interest, 44,000, 30,000, was going back a month ago when the stock was 25, going to 25 and 30. And just to give you an idea where these were big trades, these were large holders of the stock buying puts, to show you where the sharks believed that enough was enough. They probably got in at $10 in the IPO, but they're buying 30,000, 44,000, 50,000 of the 20s that were there. They're buying enormous amount at $2, $1.50. To tell you, to make it, I think for the 25s, I think it was 3.5, just to give you a sense of where they think the stock could go. You have an IPO 6-month window coming up. I think it's coming up in the next few weeks, so you might get pressure there. That's might be some of the things you're seeing. But I just think that in general, you have a situation here where, are we getting, was that part of the mountain here? Does it stop? You want to see it stop at 25, but there are 50,000 open interest here. There's a lot of puts at 25, 24, 23. And I believe most of them were long. Okay, so that causes gamma. And gamma, because people start to learn what gamma squeezes are, gamma works the other way. Remember, those options don't go away. Gamma caused the people who were short those options to panic and start buying the stock as it went up. But on the way down, they now have to sell that same stock. Again, go to that Robinhood video so you get to see where stock goes up, you buy it, option doesn't go away, stock goes down, the person short that put has to actually sell stock. So you're going to get gamma both ways. If you get another $3 move down tomorrow, you could see a $6 move. It could be compounded because of gamma. So that's how something like this works. Also, we talk about the bid offers. This is a good one. The bid offer is not as bad, but on a lot of these names, I'm seeing pretty wide bid offers, wide enough for someone like Citadel to make money. So I would just look at something like this. This Sandel, SNDL, Sundell. I mean, the 2.5 calls last week were $1.60. I think it's like ridiculous. For a one month option, 4 weeks, whatever. It's ridiculous for a $2.40 at the time. It was $2.40, $2.50 maybe, and maybe it's at the money. $2.50. The 2.5 calls were $1.60. That's just ridiculous.
Yeah,
it's why buy the option? Just buy the stock. Maybe even buy stock and sell the calls. Probably you still might lose money if the stock goes below 90 cents, but at least it seems like you'd have a better shot. And we can just go down these, but you're starting to see more and more of these names like pop up as the biggest volume names. DNN, Sundow, $1 stock, $2 stock. This SOS I just saw, it was $7, and now you read what this is, and I'll let everybody read it for themselves on what this is. This is what's moving. This is where the crowd is pushing things, and I think it's fairly dangerous. I think it's very, very dangerous. CCIV, just take a look at, the March. We looked at this stock at 16 to 17.5 calls were 360 or so. And, the idea was, do you buy stock or buy calls? Aesthetically, it looked like buying stock was the right play, right, at the time. But, that option goes from $3 to $23. That's incredible. It's an incredible move. Talking about 600% move. The stock now went from 16 to 40, so you got 150%. But wow, like it's just wow, right? Just wow. Every EV stock's gonna be worth $40-50 billion in the next 6 months. I don't know how that's gonna work, but until someone pops that bubble, it's all pretty frothy. So I would just take a look at these, and you're talking about the $41 stock, 40 calls. This is what I wanted to show you, is $12.
Right.
$12 for, that's a lot. Or 45 calls, $11. people to buy this, you would have to think, let's call it $80, where it's 45 to 80. So that would be 35. You'd make 2 to 1 on your money, 200%. If it goes to 80, if it doubles, you make 200%. Man, that's not a trade I'd like to make. That's not something I'm thinking about. Right. I also don't want to sell it because these things could get, this is the dilemma. So when you say that, the UOA is light, it's light because vol is still fairly high at 100, 150. Stocks have had a dramatic move. Can they double from here? Of course they can. I just don't think that the big money is saying, I want to jump in right now and get in. So I could take questions. We can go over things that you're seeing. What do you think?
I think it's hard. I've been trying to find stuff, but I really couldn't, and I just wanted to why, and I wanted to take a look at some SPY puts, which is something you clarified, which that was great. And I think a lot of
good. One thing I saw was this Facebook. I've seen a little bit here. It's getting bigger and bigger. The trade. It looks like they're buying the 300s.
Yeah.
So let's take a look at this, and it wasn't too long ago we talked about all of these. Let's just we talked about all of these names. We talked about NVIDIA. We talked about NVIDIA and the tech giants, right? NVIDIA,
Microsoft.
See this right here, this flag? We were showing it to you right here saying, look at that flag. This is trading really well for 3, 4, 5 months. You probably get to see, you could see a significant move. We looked at all of them, Google. Same thing. It was just standing still like this, and then made a big move. Apple's trading a little bit weak today. This to me is a little bit weak. Market's up, or at least flat. It's flat here, but it feels like it feels up because a lot of names are. But you look at Apple, Tesla, Microsoft. These are not trading well today, and those are the leaders. So but Microsoft had moved a tremendous amount. Had moved. We were looking at it right around here again in December. This is a significant move for a $2 trillion company. You're talking about $25, a 10% move. That's $200 billion is added to Microsoft just because it went from here to here. It's massive. This is massive amounts. 5 years ago, the stock was only worth $500-600 billion. Right. Now it's doing $200 billion in 2-3 weeks. I'm trying to think of what are we looking at? Facebook. So then you look at Facebook and you see this same pattern, and it's as much as negative news as you see in it. I can see what they're thinking here. This market starts trading back. You have this 285, something like this here, and then you have this long move from the bottom from coronavirus. You break this 285, you can see, you could see this, just taking this and moving it up. You could see 285, 305, probably like 330. So, can you see that? And when they're buying, they're looking at, and so I then look at it and say they're buying the 300 calls in March for $2.50. Can they get a breakout here? Can they get, they're looking for this breakout. It's not even they're looking for 300. They're looking for the break right here. They break that 285. It's going to go very quickly, probably close to the 300. And you talk about gamma squeezes, and that would be more of a gamma squeeze if the whale, which was, what's his name? Matsuyushi's son, SoftBank, if they're still long calls or they bought more calls OTC, right? They could, when you see something, for example, where were we? Okay. Where was it? Come on. Facebook. Okay. When you see something like this, what I think about is, and I see them buying, and it's a cheap option. What I think about is this SoftBank, let's just call it Mr. Sun or whatever. Is this SoftBank buying OTC options through Goldman Sachs or through a big investment bank? So what they would do is they would say, we want to buy $1 billion worth of Facebook calls, and that's not going to go on the exchange. It might it might just be an upstairs. So Goldman Sachs, or let's just call it Goldman Sachs as the investment bank. Goldman Sachs doesn't want anybody to see that there's going to be whatever the number is, 100,000 options trade, right? So, we want to keep that secret. So if I'm at Bank of America, somebody at Goldman Sachs, and SoftBank says we want to buy $1 billion notional of face bank calls in March, I don't want anybody to see that. I don't want the market to know. I don't want anybody to see that. I'll make your price if I'm the only one making the price, right? So I don't even want my competitors to see. I don't want Goldman to know. I don't want, the first question is, did you come to us first? Oh, no, I showed it to 5 other banks. I don't really care. I don't want to make the price because now everybody knows. So the winner of this trade, if I show you a good price, and the winner of that trade is now fighting against all the other banks, because all the other banks, they might go in there and buy the market or buy volatility to squeeze me. So I don't want anybody to know, first of all. But if I'm the only bank that they're coming to get a big market like this, then I can actually make the market a private market, private contracts, OTC it's called. I can make a private contract with the customer, SoftBank, and then I could nibble away at the 300 calls over the course of the next 2 weeks. And I could say, okay, I want to buy 10,000 today or 15,000. Maybe I'm short 100,000 of these and I can buy some more. In the meantime, I am without, by someone as big as SoftBank coming in to buy that many, he might have created this gamma well up there, this gamma position around the 300 level. Now his goal is to try to push it through 285. Mm-hmm. If he pushes it through 285, everybody sees what I'm seeing, and the volume starts picking up right here, right? You just start getting this pickup of volume, and in the pickup of volume starts causing the gamma squeeze at 300, and that's what could cause a gamma squeeze. I'm not sure if that's what happened. I think about these things when I see something like the 30 calls being bought in good size, and even in February or trading in February. Now the markets, I'm sorry, this is not what I'm looking at. The 300 calls here in March, and probably upside here in February. So you got the 275s and the 280s. So this looks like it's a little positioning here, and maybe switching it to the March, but someone is trading some upside in Facebook, and that could mean it could be someone very large behind the scenes who's sort of locked in right around the 300 level and needs to push Facebook through 285. Mm-hmm. That's how you talk about gamma squeezes. That's how you create a gamma squeeze. This is a real option. First of all, because we talked about Tesla last week, we talked about that wasn't a real option that they're buying for 3 cents. It's not even an option. It's like, I don't know what you want to call it, but there's no delta, there's no gamma. This March 300 has delta and has gamma. And so it's $2. If you see as the stock breaks 285, goes to 295 and starts hitting 300, this goes from right now, it's close to a 15 delta. Okay, that would quickly become at 285, 290, that would quickly become a 35 delta. And then at 300 becomes a 50 delta. So it goes from 16 to 50, which means 34% times whatever the notional is, $1 billion might be $340 million worth of Facebook to actually buy. Fair enough?
Yes.
Something like that. So that's the idea behind it. So when I'm looking at this, and I've been watching Facebook, there have been a lot of upside calls, even going back to the last 3 weeks. So they had all this negative news here, and we saw a lot of upside call buying around here, okay, during this time. So did someone buy this knowing that they were also going to come in and buy some stock, or is it just a big tech play where the stock has not moved? You're talking about bouncing around the 270 level, okay, and it's coming into this point. So this is sort of a volatility. It's like a cone where the volatility is slowing down to some extent. To right here, it's got to break one or the other. Is that fair?
Yeah. Definitely.
Same thing. If you look at, we saw the Tesla, where it's, we showed this sort of diamond pattern up here, and they try to break it, which they did. Now what happens? Does it recapture? Does it hold 775? This is a big level. If not, you could see Tesla. First of all, there's a story about China going around, and I think there's some validity to it because we've been looking at NIO, and NIO has battery as a service while Tesla is selling the battery with the car. And if China's pushing they got enough of what they needed from Tesla. They probably stole all their plans anyway. So they got enough of what they need from Tesla. And now they got 5 or 6 other, startups in China that are doing their thing with EV. And maybe they're back in NEO and this BAS as a battery as a service model. We don't need Tesla anymore, maybe. And all of a sudden you get quality concerns in Tesla. You never got that for 4 years. Well, when you get called into the Chinese office about quality concerns, it might not really be about quality concerns. It might just be, smoke and mirrors that, we're done with you, like we're done. And if that's the case, this stock trades back to 600. And if it trades back to 600, maybe even, why couldn't it go back down to the S&P ad, which was 4.25? That's what you got to be worried about here with Tesla. Okay, someone asked me a question about selling Tesla puts, and I just thought, it's dangerous, like selling Tesla puts here, because you can collect some money over the course of the next 2-3 weeks. When you sell options, you are taking on leverage risk. That's what selling options is. And so the way I see this is not a great chart. It's got to hold 770, 775. But if you see this break 775, you can see 700 very quickly. This is the top here, 700, and you'll start seeing maybe a cascade over the course of the next 6-7 weeks. I don't know. But if you see this lead horse go through this level and down, what does that mean for the rest of the EV space? I don't know. I don't know what it means, but it surely you start marking things down, right? Taxi cab story. Mark it here. This is being marked. Now you mark it here. What does that do for everything else? Everything else has got to be marked a little bit lower. And then you mark it here, and then you mark it here, which, by the way, 400 isn't the end of the world. It was there 8 weeks ago, 10 weeks ago? It was 400. So this is a little scary. I'm probably a lot more scared than the average investor, just because I kind of know the game a little bit, and I've witnessed the 2008 crash and the 1999 crash, and that's how it works. That's how it goes. It's, we joke about the mountain, but that mountain is real, and that is exactly how momentum works. All it is a mark. It's a mark down. It's not like a lot's trading. It's just a mark. So anyway, let's talk. Any questions? What people have? We can look at a couple.
Yeah, we can look at a couple. If you guys have any questions, please comment them down below. In the meantime, I just wanted to ask you, because you were mentioning banks when talking about SPY crash. I've been seeing some banks actions like on the UA today.
Yeah, the banks. I got to tell you, the banks look pretty damn good, to be honest.
Yeah,
they're a good. They survived 2008-9. They're allowed to grow. Banks have a lot of things working for them. One, they just were allowed only a couple of months ago to buy back stock. That was a huge thing. They passed their stress test, buy back stock. Two, the government's been allowing the banks to try to make back their money over the last 10 years. I don't think you'll read that in any headlines, but that's the fact. That's really what's happening here. Okay, the banks are going to need to be strong, and maybe the government's waiting for the banks to be strong to allow everything else to sort of transpire. I don't know how this story plays out, but the banks, 2020, December, there was the stress test. Then you have stimulus package, more money for people, and that helps credit, right? It helps people pay their bills and pay their interest. Real estate has gone up significantly. That helps mortgages and people taking out loans. Banks, very simply, banks make money by taking your money, paying you very little, and then lending it out to John and Mary Smith to buy a home at 4 or 5%. In a nutshell, that's what banks do. Everything else, there's a lot of different, parts of a bank and whatnot, but in a nutshell, that's where they make their most money. And on fees, you want to take your money out, you got to pay $1 to take your money out. If you want to take your money out and you bank at Chase and you want to take out your money at Bank of America, they'll charge you $3. So you want to wire money, they charge you $15, $20. So they're taking their money on fees, which is no risk, and borrowing from you at zero almost, and selling it to Mary and John Smith to buy their home at 4.5% or whatever it is now. That net margin, that's the interest, that's the yield curve. So yields, people are concerned about inflation, pushes interest rates. You got the TLTs down, bonds down, yield is up. And so banks make more money when that happens. Yields go up. And so, and when I say more money, they print money. It's like They make, it's like semiconductors when things are going good and they're just printing, a billion semiconductors. Banks print money when the yield curve goes back to normal. They will like absolutely print money. And when they print money, it's going to show in the earnings, and in the earnings, they're going to take back some of that money. They're not going to put it all in earnings. They're going to take some of that money and actually, they're not going to give it all in dividends. They're going to buy back stock, which could push it. So you got this again, this circular push of banks, where banks might be good for the next, next year, 2 years, and maybe until the banks are good, the market, that the government doesn't let anything crash. I don't know. Maybe that's the case, because at that point you got to absorb. But who knows what the master plan is? But there is a master plan. I sense something's really wrong. Okay, and I don't like what I see. I don't like how it's trading. I don't like to see Apple, Tesla, Microsoft down and this market is flat when you got like things like, I don't know, the EV names that are 10 billion just went up, 5% to 10.5 billion. I can't stress to you enough how crazy it is for some of these stocks. SOS, I've read a brief article. It's like somebody just posted, hey, Riot and Mara are too high. This is the next one. Let's go buy it. And the stock's up like a few $100 million. I mean, you're making someone is probably selling you some stock up there. This is not a good one. So let's just try to look at, people have questions and whatnot. So let's ask on a couple of these.
Yep.
I see here's one. Clove is trading like a wet noodle. I mean, the thing is like, I don't like it, but it's, as long as it's not a stop, I'm looking at it. I'm not going to trade the news. It trades awful, and until it's a stop, it's a stop. There's nothing really, it trades awful. I don't even want to say anything good about it. It trades absolutely awful. I would say that if you want to cut, someone's still long and it's not a stop, just sell half. It's not a problem. It's, you're there trying to manage losses, and that's totally fine. There's nothing wrong. There's nothing set in stone that you have to just wait to this. I'm telling you that you might be 10 times better tape reader than I am. And if you think, this thing is garbage and it's going down, I can cut my losses at 35, 40%. It's not a big deal. It's not the end of the world. Just move on to the next one. And in fact, the more that something makes you look at it, the more your body is and your brain is telling you, just get out of it. Like, don't look at it anymore. Don't try to decide whether it's going up or not. Don't just get out. And if it's 40%, just take it out. 40, 45, it's gone. That's it. So I wouldn't put that much emphasis on any one trade. I never try to trade the news, because frankly, that's how you run into trouble and that's how you get faked out most of the time. But just go with the general program, and then if one is bothering you too much, no problem, let it go and keep moving. CCIV just hit 55. Yeah, exactly. I mean, that's an incredible. It's just an incredible stock. I mean, that all of these things. We were looking at this at 16, and the stock is, wow. Let's go to, what is the 2 minutes? Is there news here? They announced they made an announcement maybe on the, sorry. Let me just do this. Look at that. So what's the news? Probably, I would guess something on they've made a deal with Lucid Motors. So yeah, I mean, look, these things are incredible. Yeah, some dude on YouTube saying Warren Buffett bought millions of stocks. Yeah, no news anymore. Warren Buffett. Wow, man, you got to be very careful. Just be very, very careful about what I don't know. I don't know if that's even remotely true. Is there news on IQ? Same thing. I do not see anything. I've seen IQ. It's traded well. I think there's 2 exits on IQ. So if you're holding 1/3, Maybe have a trailing stop, but you know, look, it hasn't. I don't feel like IQ and some of these other smaller Chinese names have had their big day just yet. But you know, again, you probably should have been out of one, at least one, probably two. What else? Anything today? Comment on BA, Boeing. I generally don't look at Boeing because it's to me it just seems like a disaster. Let's look at the daily. Let's look at the weekly first. Actually, it doesn't look bad, to be honest. Looks like a lot of these. Looks like names that have not NCLH, like these cruise lines that are like NCLH looks. You know, we saw call buying here, and again, we pointed to this move, and this move is much different. It looks more constructive here for NCLH. But let's go back to Boeing. It looks very similar, like it's trying to hold. This doesn't look like a terribly big blow off top move. It reached, you know, this, you see this 230, 240, there's a level. Is there, I thought I saw it today. Something, I thought I saw some UOA today. Yeah, there we go. So March. Looks like somebody may have done 1,000. See how it looks like someone may have done a buy put sell call spread here. That's how it looks like, just eyeing it. If I'm looking 1,000. What's going on in this week options? Okay, so this looks interesting. 215, 220. Someone playing maybe a call spread. Spreads 1007. Okay, so we're looking at let's just look at the time from this morning. 9:30. 41.39. Started the morning off at eyeball at 30. Yeah, on 30 last week. So yeah, I mean, this was looks to buy right from the get-go. 254, 338. Okay, so let's just see that, and let's just see what happened here. 220. So it looks like spreads going on here. To be honest, I can't be 100% sure, but it looks like it actually. Call spread here. Buying that call spread 215 for how much? 210. This 12,000 makes me think that someone is rolling something down here, or there's something going on here. I'd have to look at this 12. I'm not sure I can. It doesn't sound to me like someone would pay $2 to buy, you know, two and change to buy a $5 call spread, unless they were actually rolling down here. So maybe this is double. Sometimes they double count these things. So maybe there's, instead of, it looks like the same person who's in here is doing something here. Maybe he rolled down, so he was long these, and now he's rolling down to these, just to get some more leverage here, closer to where the stock was this morning. Does that make sense?
Yes.
So I would really want to investigate this a little bit more, because it looks like someone is trying to do something here. To just come in today and buy this for $2 and something, to make 2 to make 3 on a spread, is not super exciting to do 20,000 times. So I would be concerned about that. But it looks to me like the answer really lies with, what did this person do here? If they bought it here, then he's probably, this might be double counted, and he's buying this or somehow rolling this down.
And it's 3 days away. So I mean,
and it's only 3 days a day. So I don't know what the event is, and I don't know if there's anything going on here. But here's Space Force stuff. Northrop, Boeing wins jumbo orders. So maybe there was some news recently, last week or over the weekend. But the stock, if you ask me about the stock too, so that's the option. And the stock actually looks pretty constructive, to be honest. It looks like it's trying to get through this level, gets to 235, and this is essentially a gap, right? This is where the stock broke to 300. Let's call it 300. Stock broke 300. It's trying to get through 230, 240. Gets through 230, 240. You probably see 300 fairly quickly.
Okay.
All right. But so I would say cheap bets, I would like it. Yeah, for cheap bets, I would like it. I don't know about 3 days, but for a cheap bet to the upside, I actually don't think it's bad.
Cool. Nice.
What else? I would say take a look. You can take a look at the banks. How much time you got?
-4.
I would say, okay, so -4 minutes. So I would take a look at some of the banks. I have seen a lot of trading here. Let's just look over here real quick. Something like JP Morgan, right? JP Morgan has traded well. It looks like a breakout, right? This looks like a little bit of a breakout. Let's go back a little bit of time just to give you context here. Okay, this was a strong move here, no doubt. Okay, this is where it dropped, recouped that. It's trading well. The stock, no doubt, is trading well. However, this is new ground up here, and you see the volume coming down here. I hate that. I hate seeing the volume going down. I like seeing this and then the volume blasting off, as it's increasing. There's a lot of volume up here. Then when it comes off here and trades up, and all this is volume's coming down. So not a lot of volume on a breakout. See this breakout here? Up here, breaking this thing, huge volume.
Yes.
You got here, started going here, bigger volume. Over here, bigger volume. This is breaking out to new highs. Volume's not great. So I'm not super excited about JP Morgan here, but if you look at something that has been lagging, and this one sort of looks like the BA, Wells Fargo has problems for the last however many years. They got a new CEO. He's been there for a couple of years now. He's trying to fix things up. This one is trading pretty good as well for being down here. So this has a lot of room, but it's one that has problems. If you go for the leaders, JP Morgan's not trading as strong, but they're buying calls in all three, I can tell you, over the last couple of weeks. It's sporadic buying. It's not like it's huge, I need to own this now buying, but it is buying nonetheless in Bank of America, Wells Fargo, JP Morgan, even Goldman Sachs over the last couple of weeks. The banks could be the new, even if the market comes off or decides to correct, the banks may be the new sector that everybody loves because you got the yield curve going in a certain direction, and volatility is still fairly low. And when the banks have a good yield curve and are a strong base, and the customer is not going to go bankrupt, these things print money like you have never seen in your life. And that's when banks could easily triple. They had if you go back, there'll be times where in the bull markets where banks were just going crazy.
Wow. Okay.
Of course, it then crashed, and then they almost went out of business, but that's a whole nother story. So, all right.
Cool. Great. Thank you, Felix. I just want to mention to everybody that we posted a video yesterday where we went over some great wins we've had from the first 31 episodes. It's a really great watch. If you haven't seen it, make sure you check it out. And thanks for the comments. Thanks for the likes and everything. And we appreciate you.
Also, I'll say one last thing. If I do answer, I get a lot of emails, and I try to answer all of them. But I think if you have a question, just send a comment on the. If anybody has a question, put a comment on the YouTube video. I'll answer more questions there. I spend a lot of time on email, and frankly, it's like so much. I'd rather have it all so people could read it for themselves. Everybody has generally the same question. I start writing the same answer for everyone. So put it on the comments, and I'll happily get to all of them, just like I get to all the emails. All right. We'll talk to you tomorrow.
All right. Talk tomorrow.
Bye-bye.